Hello, good day, guys. My name is Nick, technical analyst of SuperForex, and today we're looking at the analysis on the currency pair USD CAD, the ground-shaking USD CAD. Recently, we have seen that USD CAD continues to lose some ground on the subdued US dollar trades near 1.3560. Now, USD CAD continues its losing streak for the third successive day as the US dollar index, turns negative post 2 days of gains. This, of course, has been having some important impetus on the trend, while somewhere else WTI price hovers with a positive sentiment on resilience in the US economy. Now, FOMC embarks on its 2-day policy meeting on Tuesday, as the US CPI for November will also be eyed. Now, USD CAD will continue its losing streak for the third successful day, and the USD CAD pair currently trades lower around 1.3560 during the Asian session on Tuesday. Moreover, crude oil prices hold steady for a 3-day winning streak, potentially providing support for the Canadian dollar. Now, somewhere else, our West Texas intermediate WTI trades near $71.70 per barrel during the Asian session on Tuesday, while oil prices saw an upswing following last week's data release, signaling a level of resilience in the United States economy. Now, however, crude oil prices could encounter challenges due to ongoing concerns about global demand, especially with weak economic data from China, the world's largest oil importer, and other major economies. Additionally, worries persist about an oversupply despite a production cut imposed by OPEC members. The US dollar index, DXY, loses ground amid a stable US Treasury yields, while the DXY beats lower below 104.00 at the time of this recording, and the US dollar gained some momentum from a robust employment figures in the United States dollar. So what we expect from this, this is currently this is currently a very important support zone and a breakthrough. We're currently on a 1-hour time frame. A breakthrough from this zone means heading to the 1.35060 and a possible halt at the point, which is about 43 to 50 pips thereabout. Of course, good morning. And if possible, an extension to this point, a new breakout, means that we should be having a test to the lowest support zone at 1.34815, which happened about a week ago. Now, that's our technical analysis on today's currency pair, USD CAD. Now, let's move over to the stock markets. Hello, welcome back, guys. And on today's stock market, we're having a look at T-Mobile. And recently, we have seen that the telecommunication giant T-Mobile invested $1,000 in 10 years ago would be worth this much today. This is just some economic breakdown of whoever had invested $1,000 in T-Mobile 10 years ago will be worth how much today. And this questions has been surrounding the T-Mobile, the top giant telecommunication company, of course. And this has been a result of being the fact that it outperformed the market over the past 10 years by 9.32% on an annualized basis, producing an average annual return of 19.19%. Currently, T-Mobile US has a market capitalization of $173.97 billion. While buying $1,000 in T-Mobile, if an investor had brought $1,000 of T-Mobile stock 10 years ago, it would be worth $5,654, today, based on a price of $150.43 for T-Mobile at the time of saying this. Now, currently, T-Mobile is on a run for the uptrend, and it has been so since this important gap at 141 to 148, 147, and it has been increasingly, surprisingly moving ahead. And this is over 114 pips, and a continuation still looking ahead, as we notice that on the 4 hours time frame, that it's seemingly heading up backwards towards that exact zone where it started from. And we are expecting that the breakout from this new resistance would mean that it's going to be heading for the 160s and the 170s. Of course, at that point, we can say it's good money. And that's our technical analysis on today's stock market. I remain your host, Nick. Bye for now.